So my name is Shanash D, guest lecturer of Government First Grade College Kurgod. Subject Corporate Accounting, chapter number 3rd, Holding Companies. Let us start. Now today we are solving the problem of holding companies. Let us see the problem. 15-mark problem. From the statement of assets and liability and the information given below, prepare the consolidated statement of Bada Limited and its subsidiary Chota Limited as on 31/3/2016. Particular note Bada Limited, Chota Limited. First one, equity and liabilities. Under equity and liabilities, first one, shareholders funds. Share capital, note number 1, Bada Limited 6 lakh, Chota Limited 4 lakh. Share reserves and surplus, second one, to note number 2, 2,30,000 Bada Limited, 1,90,000 Chota Limited. Second one, under equity and liabilities, second one, non-current liabilities. Non-current liabilities under long-term borrowings, note number 3, 2 lakh, next Bada Limited 2 lakh and Chota Limited nil. Equity and liabilities, note number 3, third one, current liabilities. Trade payables, current liabilities under trade payables, note number 4, Bada Limited 1,50,000, Chota Limited 1,75,000. Total equity and liabilities, Bada Limited 11,80,000, Chota Limited 7,65,000. Next, second one, assets. First one, non-current assets. Non-current assets. Under non-current assets, tangible fixed assets, note number 5, Bada Limited 3 lakh, Chota Limited 2,50,000. Intangible fixed asset 6,000, note number 6, Bada Limited 1 lakh, Chota Limited 2 lakh. Non-current investment in Chota Limited, note number 7, 4 lakh 10,000 Bada Limited and Chota Limited 60,000. Next, current investments, inventories, note number 8, 1,50,000 Bada Limited, 75,000 Chota Limited. Trade receivables, note number 9, 2 lakh rupees Chota Bada Limited and 1,40,000 Chota Limited. Cash and cash equivalents, note number 10, Bada Limited 20,000, Chota Limited 40,000. Total assets 11,80,000 and 7,65,000. Now explanation of above notes. Note number 1, share capital. Shares of rupees 100 each fully paid up, 6 lakh, 4 lakh. Bada Limited 6 lakh, Chota Limited 4 lakh. Total share capital 6 lakh, 4 lakh. Next, note number 2, reserves and surplus. General reserve 60,000 to Bada Limited and 40,000 Chota Limited. Profit and loss credit balance as on 1/4/2015. Balance is 70,000 Bada Limited and 60,000 Chota Limited. Profit for the year 2015-16, Bada Limited 1 lakh, Chota Limited 90,000. Total reserves and surplus 2,30,000 and 1,90,000. So next, note number 3, long-term borrowings, 10% debentures. So 10% debentures 2 lakh rupees, Bada Limited only, Chota Limited nil. Long-term borrowings 2 lakh rupees, only Bada Limited. Next, note number 4, trade payables, sundry creditors 1,20,000 Bada Limited, 1,75,000 Chota Limited. Bills payable 30,000 Bada Limited, Chota Limited nil. Total trade payables 1,50,000 Bada Limited, 1,75,000 Chota Limited. Next, note number 5, tangible fixed asset building 2 lakh rupees Bada Limited, 1,50,000 Chota Limited. Machinery 1 lakh rupees Bada Limited, 1 lakh rupees Chota Limited. Total tangible fixed asset 3 lakh rupees Bada Limited and 2 lakh 50,000 Chota Limited. Note number 6, intangible assets goodwill 1 lakh rupees Bada Limited and 2 lakh rupees Chota Limited. In intangible assets total 1 lakh rupees Bada Limited and 2 lakh rupees Chota Limited. Next. Note number 7, non-current investment 3,000 shares in Chota Limited, 3,60,000 Bada Limited. Bada Limited and Chota Limited nil. In government securities 50,000 to Bada Limited and 60,000 Chota Limited. Non-current investment 4,10,000 to Bada Limited and 60,000 Chota Limited. Next, note number 8, investments stock. Under stock 1,50,000 Bada Limited, 75,000 Chota Limited, 1,50,000 total 1,50,000 75,000. Next, note number 9, trade receivable. Sundry debtors 2 lakh rupees Bada Limited and 1,20,000 rupees Chota Limited. Bills receivable, so 1 lakh rupees. Bills receivable Chota Limited, Bada Limited nil, Chota Limited 20,000. So total trade receivables 2 lakh rupees Bada Limited, 1,40,000 rupees Chota Limited. Note number 10, cash and cash equivalents. Note number 10, cash and cash equivalents. Bank 20,000 Bada Limited, 40,000 Chota Limited. Cash and cash equivalent totals 20,000 Bada Limited, 40,000 Chota Limited. Next, additional information. First one, the Bada Limited acquired the shares in Chota Limited on 1/8/2015. Next, second one, the general reserve of Chota Limited having 1/4/2015 was balance rupees 37,000. Subsequently, rupees 3,000 are added for the 2015 and 16. Next, third one, bills receivable of Chota Limited were all the accepted by Bada Limited. Next, fourth one, debtors of Chota Limited included the amount of rupees 20,000 for supply of goods to Bada Limited. Next, fifth one, the stock of Bada Limited included goods purchased from Chota Limited was rupees 10,000. The goods were supplied by Chota Limited at cost plus 25%. So this is the simple problem. Next, we have to now solve the problem. First, share capital ratio. So we have to see first share capital ratios. So share capital first ratio, you have to calculate first share capital. So now share capital is 3:1. How it is come? So you have to first see share capital. So here share capital 4 lakh is there, total 4 lakh of subsidiary companies. So here total 4 lakh of subsidiary company share capital, but holding company acquires how much shares? See here 100 each, 4 lakh rupees divided by 4 lakh divided by 100 is equal to 4000. 4000 shares is there. Now holding company acquires 3000 shares in Chota Limited, 3,60,000 rupees. So 3000 shares is acquired holding company. So for that, so here you have to take share capital of Chota Limited 3:1 ratio. 3000 holding company acquired majority of the company, and so this is 1 ratio 1. So this is minority company. Now it is this chart showing majority and minority interest. Share capital of Chota Limited 3:1, 4 lakh for Chota Limited 4 lakh rupees. So in this 4 lakh, major holding company acquires 3000 shares into 100 each, so 3 lakh rupees, and minority shares, so remaining 4 lakh minus 3 lakh, so remaining 1 lakh major minority shares. Next, general reserve of Chota Limited. So free acquisition reserve capital. So you have to see first working note. Calculation of free acquisition reserve and post acquisition reserve. So I have to general reserve of Chota Limited 31/3/2016 40,000. So I have to see problem general reserve. Only we have to see in this problem while preparing minority chart in only Chota Limited only. So I have to see first general reserve of Chota Limited 31/3/2016 40,000. You have to see 40,000. So here general reserve 40,000. Next, less general reserve of Chota Limited 1/4/2015. So you have to see 1/4/2015. In this 1/4/2015, there is a general reserve balance is there. So here the general reserve of Chota Limited 1/4/2015 37,000. Subsequently 3,000 were added. So I have to take less general reserve of 1/4/2015 balance is 37,000. So 37,000 minus 40,000 minus 37,000, reserves created for the year in the current year, so 3,000 only. So in rupees 3,000 created for the year, out of this for 4 months, 1/4/2015 to 1/8/2015. Acquired date is 1/8/2015. So from 1/4/2015 to 1/8/2015 there are 4 months. So pre-acquisition reserve. Now current year only. Current year we have to created free acquisition and post acquisition. So now 4 month divided by 12 months into 3,000 is equal to 1,000. So before pre-incorporation period or pre-acquisition period. So one pre-acquisition period 4 months. After post acquisition period 8 months. Now we have to take, so total pre-acquisition reserve 37,000, balance is 1/4/2015. First last year profit, last year reserve plus this year reserve, pre-acquisition reserve. So for 1,000 is equal to total 38,000 pre-acquisition reserve. So in this, after post acquisition reserve is 2,000. So 3,000 minus 8 months divided by 12, 8 divided by 12 into 3 divided by 3,000 is equal to 2,000 come here. So for that post acquisition reserve is 2,000. So now you have to take holding minority chart. See minority chart. General reserve of Chota Limited, free acquisition reserve, capital reserve, just like called we capital reserve, that 37,000 plus 1,000, so is equal to 38,000. 38,000 in 3 is to 1 ratio. 3 is to 1 ratio means 3 is to 1 ratio. So 28,500, 28,500 and 9,500. So pre-acquisition reserve, so sorry, here just correct it. Not pre-acquisition. This is not pre-acquisition. Pre-acquisition. This is post-acquisition reserve. So post-acquisition reserve, revenue reserve. This is, you have to correct here. Pre-acquisition, not pre-acquisition. It is post-acquisition reserve. You have to correct here. Post-acquisition reserve, revenue reserve. Just like called revenue reserve. So current post-acquisition 2,000. So 2,000 3 is to ratio, 3 is to 1 ratio. So you have to 3 is to 1 ratio. So you have to take 1,500. Next 500. Third one, profit and loss account of Chota Limited. Now we have to say profit and loss account. So profit and loss account. So here free acquisition reserve. So here so profit and loss account credit balance surplus on 1/4/2015 60,000. So this is the pre-incorporation period, because before incorporation period 1/4/2015 there is a balance 60,000 pre-incorporation period, plus 90,000 into 4 divided by 90,000 into 4 divided by 12. So this is the 30,000 here incoming. So here there is answer pre-incorporation period in this 30,000. How means, how it is calculated? 4 divided by pre-acquisition period of pre-acquisition profit, 4 divided by 12 into 90,000. So right answer is 30,000. So 30,000 plus above 40,000, 60,000. This 60,000 plus in this 30,000. 30,000 you have to take remaining 30,000 minus remaining 60,000 is after incorporation. So you have to take same thing. So here pre-acquisition reserve 60,000 plus 30,000 is equal to 90,000. So 90,000 3 is to 1 ratio, 67,500 and 22,500. So first acquisition reserve remaining 90,000. So in this 90,000 30,000 is pre-acquisition reserve, remaining 60,000 is post acquisition reserve, post acquisition profit, 60,000. Now this is distribute 4 3 is to 1, 45,000, 15,000. Total minority interest 1,47,500. Majority of the company 4,42,500. Next total 5,90,000. Next calculation. First we have to calculation adjustments now. So it is seen. Adjustment, first we have to calculate unrealized profit working note. The stock of Bada Limited included purchased from Chota Limited. You have rupees 10,000 and the goods were supplied by Chota Limited at cost plus 25%. So you have to take, and the stock of Buddha Limited include cost plus 25% on cost. So invoice price is equal to cost plus profit. So 100 plus 25. So IP is in 125. Profit is 25. So is equal to 25 divided by 125 into 10,000. So is equal to 2,000 is unrealized profit. 2,000 is unrealized profit. So next, notes to accounts. Let us start notes to accounts. First, note number 1, share capital holding company 6,000 shares of rupees 100 each. Shares capital 6 lakh. Only holding company shares. You have to take holding company shares in this. 6 lakh rupees. Next, holding company column shares share amount. Next, note number 2, this is very important aspects in this chapter. Reserves and surplus. So reserves and surplus, see the minority chart. Now capital reserve 3 by 4 free acquisition reserve. Share in the pre-acquisition reserve. So you have to take pre-acquisition reserve 28,500. Only majority column, holding company column. So here 28,500. So next pre-acquisition reserve. Next pre-acquisition profit 67,500. 67,500. See here 67,000 free acquisition reserve and free acquisition profit 67,500. This is the pre-acquisition reserve and pre-acquisition profit 67,500. Next, total 96,000 less deducted from goodwill. So goodwill, we have to see now goodwill column. Note number 7, cost of shares of Chota Limited. So I have to purchase Chota Limited cost in question. So I have to take. So here 3,000 shares in Chota Limited in government securities, 3,60,000. But face value is, so here cost of shares in Chota Limited, we have Chota Limited purchased 3,60,000. But holding company face value of shares acquired 3 lakh. So excess being goodwill, remaining excess being goodwill 60,000. 60,000. In this 60,000 plus add goodwill of both companies, holding company and Bada Limited and Chota Limited. So you take goodwill. So here 1 lakh plus 2 lakh, 3 lakh rupees, add 3 lakh goodwill. 1 lakh plus 2 lakh. Bada Limited 1 lakh and Chota Limited 2 lakh. Total 3,60,000. 3,60,000, whichever is more, capital reserve are more or goodwill are more. Plus, so here capital reserve is 96,000. So here goodwill is 3,60,000. So I have to, whichever is more in this, 3,60,000 is more. So for that, here less capital reserve 96,000 rupees. Same both side to 96, whichever is less. So that amount will less both side. So capital reserve 96,000, 2,64,000 goodwill. Same amount deducted capital reserve. So in this capital reserve deducted here. So here less deducted from goodwill 96,000. So capital reserve is nil. Next, general reserve of holding company. General reserve of holding company reserve. So you have to take. So reserves of holding company in question. So a general reserve of holding company is 60,000. You have to take 60,000 here. General reserve of holding company 60,000. Add 3 by 4th of the holding companies. Add 3 by 4th of holding company. You have to see uh, minority chart. So you have to take this amount. So minority chart. So you have to take 1,500. So we have to see holding company. So in minority chart, so for free post acquisition reserve, so 1,500 you have to take. This column is only considered in while preparing consolidated balance sheet of a holding company. So now we have to 1,500 plus this 60,000. So this 60,000 plus 1,500 61,500. Next 61,500. So general reserve of holding company. Next, so this you have to take here. So in this year, so afterwards you have to total it. 61,500. See, profit and loss account of Bada Limited. So now profit and loss account 70,000 plus 70,000. Next, you have to see profit and loss account 1,000. 70,000 70,000 plus profit and loss of Bada. Next, profit and loss of Bada Limited. So here 1 lakh plus 70,000. So you have to take 1 lakh plus 70,000 in this problem. 1 lakh plus 70,000. So in this, so you have to take 1 lakh plus 70,000. 1 lakh. So here 1 lakh 1 lakh plus 2015 70,000 1 lakh 70,000 you have to see. So answered 1 lakh 70,000. Next, add a 3 by 4 share in post acquisition profit 45,000. So you have to take free. So both, so this one 45,000 this was added. So total 1 lakh 45 to 1 lakh 44 1 lakh 70,000 plus for 45,000. So you have to 2 lakh 15,000 less unrealized profit according to, so in this amount. So you have to see no working note, this 2,000 less deducted or less 2,000. So total reserves and surplus note number 2, 2,74,500. Next, note number 3, minority interest. So minority interest you have to complete whole amount had it here. So here same take it here. So whole amount of holding company minority chart. So here see all these amounts add it. For example, see here minority interest, shares in S company limited 1 lakh rupees. Minority chart column, minority chart under minority column 1 lakh rupees. 1 by share in pre-acquisition reserves 9,500. Post acquisition reserve 500. Next, shares in pre-acquisition profit 22,500. Shares in pre-acquisition profit 15,000. So this is the, so here see this column. So here, so 1 lakh rupees, 9,500, 500, 22,500 and 15,000. This is the 1,47,500. Note number 3, minority interest. Total 1,47,500. Next, note number 4, long-term borrowings. So you have to take debentures, long-term borrowings. So you have to see question. So long-term borrowings. Debentures only one company. So now you have to take 1 lakh rupees. So you have to take 1 lakh. So you have to take, so long-term borrowings debentures only Boda companies, total 2 lakh rupees. So long-term borrowings. Now note number 5, trade payable. Trade payable means, so you have to take trade payable, both the company trade payables. So you have to take both the company trade payables. So trade payables 1,20,000 plus 1,75,000. So you have to take 1,25,000 plus 1,70,000. So here 1 lakh subsidiary company, sundry creditors, holding companies 1,20,000, Bada companies 1,20,000 and Chota company, subsidiary company 1,75,000. So total 2,95,000 less intercompany transactions. Less intercompany transactions 20,000. You have to see adjustment in the problem. So adjustment in the problem. So here adjustment. First you have to see adjustment. So here debtors of Chota Limited included the amount of rupees 20,000 for supply of goods to Bada Limited. You have to deducted both side debtors and creditors, intercompany debts. So you have to take intercompany debts less intercompany transactions 20,000. So 2,95,000 minus 20,000, 2,75,000. So sundry creditors. Next, bills payable of Bada Limited 30,000, only 30,000. So you have to take 30,000 rupees. So in this question, see questions 30,000 only Bada Limited 30,000. So in this amount 30,000. So 30,000 minus intercompany debts. You have to take intercompany debts. Intercompany debts question, you have to see question. Intercompany debts all, see bills receivable of Chota Limited were all accepted by Bada Limited. So you have to take intercompany debts. So you have to take intercompany debts. Intercompany debt. Bills payable of Bada Limited 30,000, less intercompany transactions 20,000. So total trade payable 30,000 minus 20,000, 10,000. So both the total trade payables, so 2,75,000 plus 10,000, 2,85,000. Next, note number 6, tangible assets, buildings holding company 20,000, 2 lakh, and subsidiary company 1,50,000. You have to see both side in the question. So you have to see building 2 lakh plus 1,50,000, machinery 1 lakh plus 1 lakh, 2 lakh. So you have to see 1 lakh plus 2 lakh, 1 lakh plus 1 lakh. So I have to see building holding company 2 lakh, means bada company 2 lakh, chota company 1,50,000, total building 3,50,000. Next, machinery, bada company 1 lakh, chota company 1 lakh, total 2 lakh. Total tangible assets 5,50,000. Next, note number 7, already goodwill explained. So cost of shares Chota Limited 3,60,000, less face value of shares acquired 3 lakh, means 3 lakh how it is comes, 3,000 shares into 100 each, so 3 lakh. So 3,60,000 minus 3 lakh, so excess being goodwill, 60,000 is goodwill. So goodwill plus add goodwill, Boda Limited 1 lakh, Chota Limited 2 lakh, total 3,60,000, less capital reserve according to note number 2, so 96,000. So 96,000 deducted 2,64,000 goodwill. So I have to total goodwill amount total 2,64,000. Next, note number 8, non-current investments. Investment in government securities Bada Limited 50,000, investment in government security Chota Limited 60,000. So both side you have to see question. So investments question. So you have to see investments. So 1,50,000 plus 1,75,000. So total 2,25,000. So you have to take 2,25,000. So you have to non investment in government securities. So I have to investment in government securities. $50,000 plus 60,000, 1,10,000. So I have to take 1,10,000. So here 1,10,000. Next, 1,10,000. Next, inventories, stock. So you have to take stock. So 1,50,000, 75,000. You have to see question. 1,50,000, 75,000. So you have to see answer. So here 1,50,000. 1,50,000 and 1,50,000 plus 75,000, 2,25,000, less unrealized profit 2,000, total 2,23,000. So I have to take in same in minority chart also unrealized profit less. You have to less it, minority chart less. So here unrealized profit also. So you have to less sundry. So you have to less mobile note number 2 also and stock also. Less unrealized profit 2,000, total 2,23,000, and both the side unrealized profit note number 2 and note number 9. Stock 2,23,000. Total inventories 2,23,000. Next, note number 10, trade receivables. Sundry debtors Bada Limited 2 lakh and Chota Limited 1,20,000. So you have to both the side 2 lakh Bada Limited and Chota Limited 1,20,000. Total 3,20,000 rupees. Less intercompany debtors. In sundry creditors also less 20,000. So here also trade receivables also less according to adjustments 20,000, less 20,000, 3,20,000, 3 minus 20,000 is equal to 3 lakh rupees. Bills receivable of Chota Limited. So less intercompany debts. So bills receivable of Chota Limited. So you have to take Chota Limited. Bills receivable of Chota Limited question. So bills receivable of Chota Limited 20,000. So you have to take 20,000 less intercompany debts. So 20,000. So bills receivable is nil. Total trade receivables 3 lakh rupees. Note number 11. So you have to take cash and cash equivalents. Bank holding company 20,000 and subsidiary company 40,000 cash and cash equivalents. You have to see the cash balance. So you have to, so 20,000 plus 40,000 total 60,000 bank balance. So your 60,000 is bank balance. So consolidated statements, consolidated statement of assets and liabilities as on 31/3/2016. Particular note amount total. So you have to almost you have to take equity and liability, shareholders funds, share capital note number 1 6 lakh rupees, note number 1 total, reserves and surplus note number 2 total 2,74,500, total 8,74,500. Next minority interest note number 3 1,47,500, minority chart or note number 3. No, next note number Next, non-current investment, long-term borrowings, note number 4, 2 lakh rupees, note number 4. Next, next fourth one, current assets, under current asset trade payables, note number 5, 2 lakh 85,000 total, note number 5. Total equity and liabilities, 15 lakh 7,000. Next, second one, assets, non-current assets, investments, non-current investments. So under A, fixed assets, tangible assets, note number 6, 5,50,000. Intangible assets, note number 7, 2,64,000. Next B, non-current investment, note number 8, 1,10,000. Total 9,24,000 non-current investments. Next 2, current in assets, inventories, note number 9, 2,23,000, note number 9. Next note number 10, trade receivables, 3 lakh total. Next, cash and cash equivalents, note number 11, 60,000 total, 5 lakh 83,000 note current assets. Total 9 lakh 24,000 plus 5 lakh 83,000, 15 lakh 7,000 total assets and liabilities. So this is the holding company simple and easy problem.